Trading is a mind game. Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. Fix your mind, fix your trading.
What is the TP family, and how do you become part of it? Don't worry, if you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for trading psychology. When Cliff Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple. Education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading.
Hello, TP family. My name is Tenzin Shells, and welcome to Trading Psychology Masterclass right here on YouTube Live. Today, we are not just talking about trading. We are learning how to think better, trade better, and make better decisions in both our trading lives and also in our general life that we already live. At Cheqona, we believe that wisdom, discipline, and faith are the keys to success, both in the market and in your life, like I said before. Our goal is to help you to develop the right mindset, build confidence, and trade with much more clarity in your mind. So that's why we are all about trading psychology, so that you can achieve financial freedom and personal growth for your own individual self. Here's what is coming up: a simple but powerful trading psychology lesson that we will be going over, how to find your edge in trading, a quick look at the charts, and our book summary of the month, which is the psychology of money, as there's a lot to learn from all of these sessions that will be coming up. So make sure to grab your pen and your notebook, and if you haven't already, share this link with someone who needs to be here right now. Okay, now can I know where everyone is tuning in from? Yeah, let me know where everyone is tuning in from. Oh, so I'm ready to learn. You're watching from South Sudan. Hi, Nancy. Nice to meet you. Where's everyone tuning in from? I want to know where everyone is tuning in from. South Africa, hi, nice to meet you. And Rwanda, India, Benin Republic, UAE, hi guys, hi everyone. Welcome to Trading Psychology live session. Kenya, Nigeria, Ghana, Larry from Kenya. Nice to meet you. Denver, USA, and South Sudan once again. It's wonderful to have everyone here, and I really hope that you learn what you need to learn from today's live session. Thank you, everyone.
Okay. Good morning, good afternoon, good evening, depending on when or where you're tuning in from. Of course, thank you very much for the last segment, Shells. And welcome once again to the TP Masterclass. Really excited to share this segment with you. As you already know, my segment will be covering the book review. Okay. And for those of you who are brand new to the call, my name is Willis Romy once again. And the book that we are currently reviewing is The Psychology of Money. Okay. So The Psychology of Money is a book that I really, in fact, probably the best book when it comes to reading, reviewing, reflecting, and definitely taking action, especially in my trading journey that I've ever read. And by the way, this is something that I keep meditating on. I'm listening to this also via audio. And I really hope and pray that it does the same thing for you. Okay. At the end of the day, just to remind you that what we are actually doing here is just a lot more than just a book review. It's far from just reading a book. As much as it is also getting people into the great habit. And remember, one thing that I spoke about last week was becoming creature of habits, because your future will also be determined by the level of habits and the habits that you implement on a regular basis, right? But not only just reading the book, but making sure that our mindsets are geared in the correct way in order to be able to, whether that be to receive greater income or to become better traders or better business owners or become even a better, whatever your endeavors are, even if you're a top employee or looking for a particular job. The whole purpose of this, just to remind you, is to fix your mind, essentially. When you can fix your mind, you're basically able to fix your decision making. When you fix your decision making, you make better decisions and you have better outcomes at the end of it. All right. So that being said, I'm just going to run through everything that we've gone over in the last couple of weeks when it comes to our book summary. All right. So first things first, we went over chapter 1, where we spoke about nobody being crazy. Okay. Nobody's crazy. Why? Because we all come from different walks of life. And understanding that our decision making is geared based on the culture, based on the environments that we've grown up in, based on some of the decisions that we've just unfortunately had to make at that particular time. And so therefore our mindsets are kind of structured in a certain way that it's kind of stuck with us. It's a part of us. Does that make sense? Chapter 2, we spoke about luck versus risk, the similarities and the differences and the timing at which they both occur. Okay. Chapter 3, we spoke about it never being enough. Okay. As human beings, we desire the next best thing. Even there's billionaires that want to become multiple billionaires. There's multiple billionaires that want to become trillionaires. There's us, for example, in a lot of cases, we're trying to go from, hundreds to thousands. And somebody who's at thousands was looking at the next person that goes from thousands to hundreds of thousands, and so on and so forth. So the question is, when does enough become enough? Having a goal, having a structure, and having set targets in place. Chapter 4, okay, we spoke about the power of compounding. Okay, how powerful it is. I shared how compounding, in my opinion, requires faith. Why? Because the outcome of compounding, especially if you haven't seen it for yourself, requires a different level of faith. Consistency, of course, drives the ability to maintain faith as well. Okay, the last chapter we reviewed was chapter 5, speaking about not just getting wealthy, but staying wealthy and the mindset that's required. So this week, we're going to be reviewing chapter 6, okay? And chapter 6, we're basically speaking about tails. Let me get this correct. Tails that win, okay? So tails you win. Now, what that basically entails in this chapter is we're talking about small events, or in fact, let me rephrase that. We're talking about big events that don't often happen or don't happen enough, right? And the thing is, when we come to these big events or these tail events, as the book describes it, is we often get these events and a lot of us experience some level of FOMO. Okay, I don't know if anybody can relate or agree with where I'm going with this. When I say FOMO, what I'm referring to is a level of anxiety that comes when we feel like we've missed a major or a massive opportunity. Okay, for those of you who don't know what FOMO is, I'm pretty sure 99.9, if not 100% of you know what FOMO is. It means the fear of missing out. Okay, so we have an event. I'm going to give you an example for myself. I remember in 2021, I was still a baby, still very fresh into the game of investing, trading, Forex, and so on. And every time I felt like I knew something, I knew a lot. There's always a lot more. I basically was humbled, humbled to such a place where I needed to learn more, submit myself under mentors, so on and so forth. Right. However, around that time and that year was also a bull run for crypto. Okay, me being very new to crypto, as much as I'm trying to focus into Forex and trading and all this kind of stuff and really be geared into maximizing my skill set and becoming the better person in the process, I see a lot of people changing 1,000 into 50K, 500 into 500,000, becoming millionaires overnight through this crypto bull run, right? And I'm seeing a lot of this happen. And I'm like, wow, I really want to get into this bull run. I really, people are making money. You know, social media, you know how it plays out. And then oftentimes I wanted to get in, and my eagerness to get in starts to make the wrong decisions. Now, of course, in certain cases, you can actually trade, for example, things like Bitcoin, things like Ethereum. You have access to trade this on certain accessible platforms like our usual broker or MT4, right? Not understanding everything or all the facets that are involved with it. So with no knowledge, I'm trying to do it and losing money whilst I'm supposed to be focusing on what I'm supposed to be focused on. Does that make sense? So my point here is there are going to be many tail events. And in that particular year, I'll definitely say that's just one example of many examples I can give you of a tail event whereby people had the right information. First of all, they've been studying the game of crypto for a very long time. They had the right timing, the right information. They were a part of the right community. They had the right relationships, right? And one single opportunity during the season occurred whereby people were able to change a small amount of money or strategically place £1,000, which for them might be small, and change it into life-changing income for depending on who that person was or the people that I'm referring to in this instance, right? So my point is, tail events are incredible when they do happen. They don't happen often. Now, I'm going to kind of flip it now. Why? Because I've spoken about the tail event, but what happens when the tail event doesn't occur? What are we referring to? We're referring to the multiple events that happen on a regular basis, on a minutely basis, hourly basis, daily basis, things that are consistent to us, right? Oftentimes you overlook the fact that these tail events happen once in a lifetime, right? Even if it's during the day. During the day, you might be even going for your trades and you're seeking a good opportunity to place a trade and you just miss it. Let's just say it was a big news event happened and you missed the trade. You said, oh, this gold XAUUSD is going to buy. It should be going for a buy based on this information. And you miss the trade, right? Let's just look at that as a very micro version of a tail event. You missed the trade, you missed the setup, and what happens? I need to buy back the market. I need to, not knowing that a lot of these people that predicted that the market will go up, they've been taking different losses during that process. But not just that, they've actually studied their way through time to get such type of trades on point, such type of opportunities with the perfect and the correct timing. Okay, so my point is, we often underestimate how frequent losses are. We often underestimate how consistent tail events don't happen. They don't happen all the time. But how can you prepare yourself in order for you to gear up for such major opportunities? Right now, I'm not an expert in crypto, something that I'm looking into here and there. However, it's just an example, right? Is that season and timing of preparation. What do you do, right, in preparation of potential events, right? When they do happen, not just expecting the event to happen, if they do happen, how will you be in a position to be very well prepared? Okay. However, understand that the power of tail events, okay, some people also misunderstand that even when it comes to a majority of investments, even if you have a portfolio of different stocks or different things you're investing in, people forget that sometimes it's 2 to 3 to 4, sometimes just about half of your portfolio that consistently does well. The other half is not always doing well. However, the half that is doing well makes up the majority of the income when you do make an increase or a profit. Does that make sense? And I'm sure you've heard this example before, and this is why it really dawned on me. You've seen some people say, all I need is a 30% win rate. All I need is a 20% win rate. So in your head, you're probably thinking, no, 80% win rate. You need an 80% win rate to be a professional trader, to be a successful trader. I don't think that's the case. As far as my research is concerned, when you listen to successful traders, and I mean verified people that work in hedge funds, banks, a lot of the time they say you just need to be 0.5% right. A lot of the time they just said, all I need to be is just 30% of the time. If I'm correct, that accounts for the majority of the growth in my portfolio. That accounts for the majority of the income that's being made, that's been generated for the firm, and so on and so forth. So it's just a reminder to myself and to every single person in the TP family that understand the mindset that's required is one of patience. I don't know how many times I'm going to mention that word, but patience is required at all costs. As many times as possible, it requires patience. It requires a different level of mindset, okay? But most importantly, understanding that when these tail events, because we're talking specifically about the tail event in this chapter, in chapter 6, when this tail event does happen, okay, it will be very more than prepared for that event to happen. And that event can be incredibly life-changing. Now, I've spoken about tail events. I've spoken about the mindset that's required. But what is the type of person that is required? Well, the type of person that is determined and is committed to staying prepared or getting prepared. What's going to help you get prepared? Okay, let's just talk about Forex. Okay, let's just talk about Forex or somebody who trades gold. It doesn't really matter at the end of the day. However, how determined are you to understand everything that it is to know about trading gold? How determined are you to understand everything that it is to be trading indices? Does that make sense? So the idea is staying ahead of the curve, being prepared, gearing yourself with knowledge in preparation for any potential life-changing event that might even overnight make you so successful when it comes to trades. However, it requires a certain mindset, okay? And what else is required within that mindset? Thinking long-term, okay? Thinking long-term. And I've mentioned patience already, but it's very important because success sometimes requires that. It requires that a lot. Okay, it requires a certain mindset in order for you to have patience, because oftentimes we are very, how can I describe? We're very into the charts oftentimes, or we're really trying to figure out the market, which can never be figured out. Okay, you just have to be in the right place and at the right time. Okay, understand sometimes the risks that is involved when it comes to tail events. Because why? I've already mentioned that tail events don't happen very often. So what about sometimes the other events that happen on a daily basis? I'm investing money, I keep losing money. I heard this saying once upon a time, and it was that all the money that you've lost in trading is just your tuition fees when it comes to the markets. Okay. So for somebody who maybe never had the privilege to go to university, or maybe they never wanted to go to university, at some point you have to realize the price has to be paid somehow. And I pray that if you're brand new to the world of trading, that you experience paying the price as early as possible, right? If you're privileged enough to learn and glean from a mentor whereby you've had good coaching, good experience, and you grow, and all of a sudden you're incredibly profitable, even in your first couple of weeks / months, or even in your first year, amen to that. That's great. But part of the mindset that's required is patience, but also understanding how losses work, how to control your emotions, how to work on your trading psychology, the whole purpose of this masterclass in general, how to prepare yourself, how to psychologically prepare yourself in case losses. What happens when I have a loss? How do I manage my emotions? How do I manage my portfolio? How do I create a mentality that is consistent? How do I become the person in order to manage a certain level and a certain amount of money? Does that make sense? So understand the risk that is involved. Okay. Understand the risk that is involved when it comes to the small events that happens over time. Okay. And of course, the last one I also want to mention is making sure that you have a mentality of survival. I believe in the last chapter when we spoke, specifically, we spoke about getting wealthy and staying wealthy. Staying wealthy requires a survival mentality. And I like the fact that it segues from chapter 5 into chapter 6. Why? Because they're talking about similar things here. They're talking about somebody, the strategy, in fact, that you take to get wealthy sometimes might involve bigger risk. But now that you have the money, okay, it can very easily come in and you can very easily lose it. Okay. But what then needs to change in order for you to get the money quickly, but also maintain safety or survival mechanism? Okay. And this is what we're referring to. Sometimes it might mean I've made £100,000. Okay. Now that I've made £100,000, how do I maintain steady growth rather than risking £50,000 to potentially make £300,000? Okay. That's the whole idea of survival. The best people in the world, they don't only know how to get wealthy, but they also know how to stay wealthy. Okay. So if there's one thing I'll definitely leave you with is this: understand the mindset that is required, okay, when it comes to tail events and also when it comes to staying wealthy. Okay. The mindset that is required is these 4 things. I want you to write these 4 things down. Okay. Number 1, the power of tail events. They don't happen very often. So stay prepared. If there's one thing I will probably ask you to write down, is just stay prepared. Be in a mode of preparation. Okay. And always be prepared. There's never I'm now prepared. You're always preparing. You're always learning. You're always growing. I'm always growing. There's never a time where I can say I am the GOAT, that I know everything. I'm still growing. I'm still a student. Very oftentimes I might refer to myself as a student of the game. Okay. I'm somebody who's a student and I still want to remain in that mode of being a student. Okay. But stay prepared. Keep learning and keep growing. Number 2, be a person that thinks long term. Okay. Tail events, they can happen overnight. But if you're just going to wait for that tail event to happen, it might never come for you. That's the reality. It's probably never going to come. And even if it does come, it will be in a particular place where you're never prepared. You're not prepared. And you don't even know what to do in that particular moment. You probably won't even be thinking properly. I like to use crypto as an example. Why? Because it's something that happens more aggressively once probably every, I would say, 2 to 3 years. As we know, if you're not aware, the bull run happens every 2 to 3 years. This is usually where crypto, it goes up. The price of Bitcoin goes from what it was, it 10x's, or it does a lot of margin, and then it drops a little bit, and then it does more. And then after that, it's quiet. It's just quiet for a year, quiet for 2 to 3 years, and then it comes back again. That's the pattern as of recent times. Okay. But think long term. How do you prepare yourself in that state? Number 3, understand that there's a difference between risk. Understand risk when it comes to different tail events. Okay. It's unpredictable. So therefore, you need to make sure that you're consistently doing things every single day to prepare yourself. Okay. Understanding that it also requires giving your tuition away. Your tuition is your losses. You're going to learn from the losses. You're going to grow from those losses. So don't lose much. And I love the fact that we're talking about the TP, trading psychology here, because a lot of things that we cover in these sessions, we don't just cover the book segment. We don't just cover the mindset. We also cover risk management. We cover the edge, but most importantly, we cover the entirety of the trading psychology and the mind as well. Okay. Last but not least, remember the survival bias or the survival mechanism or the mindset of survival that you must maintain when it comes to failures as well. When it comes to remembering that when you get to a certain place, even if you maintain a certain level of information, it still requires survival. It doesn't have to be with money. Let's just say you have a great strategy that's consistent for a week. You continue using it, And after that, you see a loss, you see 2 losses. And when you see the losses is now when you just deposit $500 into your live trading account. And so it burns a little bit. Let's just be, that's the reality. You've done consistently, even you've done live, but just on a demo account. The moment you deposit $500 in your trading account, that's when you experience your first loss. Pride will kick in. You might get a little bit frustrated. That in itself requires a level of survival. Making sure that even through the failures, everything that I've written down, all the plans that I've had, I'm just going to maintain structured and consistent towards that until something big happens. And what I predicted, what I've studied for, how I've prepared myself in that season will come to pass, providing that a major opportunity comes around. Okay, so once again, I'm going to mention that in case anybody missed that. Okay, number 1, tail events. Stay prepared. Okay, so stay prepared. In fact, just say stay prepared. Number 2, adopt a mindset that thinks long term. Okay, adopt a mindset that thinks long term. Number 3, understand the level of risk that is required. And number 4, have a survival mentality. Okay, survival mentality is not a bad thing. Okay, it just means that you are you have a mindset that is sensible, in my opinion. You're sensible about the risks that you're taking. You're not over leveraging. You're not taking more risks than you need to be simply because you've had a great quality trading day or you've doubled, tripled your account. You're maintaining a consistent mindset that's required for you to become successful. Okay, I'll end on this note. One of the things that I've learned a lot of things. Remember, I'm a student of the game. After my segment, I stay on the call just like a student. I listen to every other segment. Okay. And one of the things that sticks or that hits home for me is the financial thermostat. It doesn't matter how much money one can have, but the amount of money that stays in someone's hand is based on their financial thermostat, their mindset, how much they're actually able to maintain or even manage. Believe me, I've seen it myself. I've seen it through other people. Okay, you can have a lot of money and not know what to do with it and how to manage it. The faster it comes into your hands, the quicker it will exit you and it will escape you. Okay, so raise the bar for yourself, for your life, your mindset. Your financial thermostat can also increase. However, it requires time, it requires patience, it requires effort, and a lot of the points that I've mentioned today. Okay, so I'm super excited for the rest of the call and the other segments. Okay, I believe the next segment we're going to be discussing is about risk. I'm super excited. I'm ready. I'm absolutely ready. Most importantly, though, we are all here to not just give you information and knowledge. Anybody can do this, but the point and the purpose is we're all on a journey together to fix our mind, to fix our mindsets, to have a shift in mindset in order to become better people, more effective in the marketplace, more effective when it comes to trading, make better decisions in order for us to have a better future. Okay. On that note, I'm going to leave it there. My name is Willis Aromi. This was the book segment. I'm super excited to share chapter 7 with you next week. And I will now hand it over to the next segment, speaking about risk. Peace out, family. Bye-bye.
Thank you, Willis, and thank you, Shells, for setting everything up. First, I want to just confirm if everybody could hear me. Before I get started, I want to make sure everybody can hear me. Okay, looks like we're good. So I just wanted to give it back one more time. Thank you so much, Willis. That was a great summary of that chapter. It's one of my favorite chapters in that book, and it ties in perfectly to what I wanted to discuss today with you guys about risk. I don't know if you remember a couple of calls ago, I gave you guys kind of a thought exercise, like just a question. If you ever consider the losses, if you ever consider the accounts blown, if you ever go back and study, what mistakes or what errors were made, I believe that it ties in hand to what Willis is speaking about, tail events. Those opportunities, sometimes they're not obvious in the moment. Sometimes those opportunities could have been in disguise in one of the losses that you took. In one of the accounts that you blew, there may have been a lesson hidden in there that would have taken you to the next step. But if you never went back and checked and read for yourself, or analyzed for yourself your results, you would have missed these opportunities. So the concept of that last chapter is that tail events means it's the right place and the right time. If you can endure moments of failure, you can eventually capitalize when the right time comes back around. However, if you don't realize, if you don't recognize when you're in the tail event, it makes no difference to you because you don't know what you don't know. However, preparation, especially when you're reviewing your performance. So this isn't preparation in the sense of reading books and understanding the wisdom and the knowledge and hopping on calls like TP family calls, and that's a separate type of preparation. But having the self preparation, having a connection to the actions that you've taken so far, having accountability for the actions that you've taken so far is a different kind of preparation. So I want to give you guys another thought exercise. There's these two scenarios. I'm going to give you two options. Option number one, 100% chance of $100 every week, no matter what. Let's say I was giving out money, right? Option number two, 10% chance of $1 million one time. If you get it, you get it. If you don't, you'll never see it again. I just want you to stop and think about what that would mean for you. Who would choose $1 million maybe one time, or 100% guaranteed $100 a week for the rest of your life? Some people would do the math. I mean, if you're smart, you'll do the math, right? Estimate how much life do you think you'll have? Multiply that, the amount of years divided by 52 weeks. That's $5,200 a week. I'm about 30 years old. I can do the math. It's not close to $1 million. It's not even close, but it's 100%, So the point is that we value risk differently. We value risk to reward, or the concept of a prize, the concept of a gift or a present, or let's call it a miracle type of situation. We value that very, very differently than what we value fear or safety. For our risk appetites, or for our independent money psychology blueprint, the $100 a week might make sense for some, but for someone who sits there and does the math, they might realize, it's not going to pay off. It doesn't make much of a difference compared to the opportunity to have a lot more than that. And that's why the lotto, if you ever heard of lottery systems and things like that, that's why they work, because customers are investing a small amount of money for a potential enormous return. Why that matters, or how that relates to risk management, is that is the tail event. So when you have a proper risk plan, when you are connected to the actions that you're taking in your account, you can have both the $100 a week and you can have the $1 million 10% of the time. You don't have to sacrifice. You're only sacrificing if you're unaware of the behaviors that you're doing while you're trading, because then there's no calculations being made. You don't know if something goes wrong, what it was that went wrong. If you're, you can be the builder of the boat or the captain of the boat, or you can be both, if you think about it. If you're the captain of the boat, you're steering a boat, but you don't know where the screws are. You don't know if there's a leak. You don't know how to fix it. You know how to steer the boat. And if you built the boat, you know where if something goes wrong, you know every little part that goes wrong, but you might not know how to steer it. What I'm submitting to you is, when you combine risk management and psychology, you don't have to sacrifice one for the other, because they do work hand in hand. They work in tandem. So what does that mean for us practically, for traders who may not have seen withdrawals or may not have seen a net positive return? If you're still below the zero line, or if you just haven't broken even on your journey in trading, like Willis very much said, I also believe that you pay the price, you pay the tuition in the market. Every loss is a tuition in the market. But if you don't take the losses as lessons and learn from them, then you can't convert them. You can't withstand the bad events, so that when the tail events come, you'll be able to capitalize on them. So to wrap that up, I'm going to keep coming back on these calls, and I'm going to slowly take you guys through a journey of tying in First of all, your understanding for the psychology of money and how that looks in terms of math, very simple math, just attaching the dollar amount that every single win or loss could potentially give you. The beautiful thing with risk is the downside is capped, right? The downside is capped, meaning once you've decided your risk numbers, you know what your stop loss is going to be. Or what your loss should be on the day. You know where it should stop. In a perfect world where everything works, you know where it should stop. However, the upside is technically, it's limitless. It's unlimited. The upside to once you have defined your risk, the upside will always be limitless because once your risk is capped, you can always scale. You can scale in the positive direction. You can't scale past negative. You can't scale past zero, but you can scale in the positive direction. So that's the difference between having multiple. You'll have two means of making money. You'll have the $100, quote unquote. Let's say the $100 weekly, and then you'll have the potential for, if you're losing small amounts, when the big opportunities come, you'll have potential for larger amounts. I'm going to give you one last thing before I go. I'm going to give you another thought. I like analogies and thought experiments. So let's pretend that I give you a coin, and I told you that this is a trick coin, magical coin. The tail side is heavier than the head side. So no matter how you flip it, the tails will pull the coin down and the heads will always show up on top. What if I told you that no matter what, if you flip the coin 10 times on average, 6 out of the 10 times you will have heads, 4 out of the 10 times you'll have tails? Think about that. Just so you guys know, if you didn't know, mathematically speaking, there's no correlation between one coin flip and the next. In a 50-50 scenario, all events are completely independent. So even if you had 10 tails in a row, there's no guarantee, there's no degree, not 1% of change in degree of certainty for the 11th coin flip. It's going to have the exact same probability as the first 10. However, I'm telling you, in this magical world I'm inventing, right? There's a weighted coin, and no matter what, it will always give you 6 out of 10 times heads. The other 4 could be tails. It would generally be tails. If you're smart, you'll bet everything on head every single time. You're not going to care if you go 1,000 tails in a row, because you know that all that means is for that the opposite side of that, the next, for whatever amount of time, you would have eventually a larger amount of heads over the tails. So what I'm giving to you is, if you have a properly structured risk plan where your downside is capped, your stop losses are accounted for, before you even sit down a chart, you know every dollar you could potentially lose, and you actually stick to that plan. It's the same thing as having a weighted coin. It's the same thing. It works exactly the same way. You're bending numbers, probabilities, and risk to your favor. That's all I have for you guys. Let's keep going. Next up is going to be Kema. I appreciate you guys. Thank you again to Shells and for hosting, Cliff and everybody in here. And yeah, move on.
Thank you so much, Ivan. Thank you so much. Thank you so much for joining the session today. I am really glad that everyone is here, and then I believe that you guys are learning so much. I was jotting down some notes, and man, like the pointers and then everything, it's so cool. And trust me, every single time we keep learning, every single time we keep, learning from each other, because every individual has something to share. Even you have something in you that if I meet you one-on-one, I would want to listen to and then pen down. So thank you so much, Ivan. I really appreciate for that knowledge that you brought in there. Today, I'm really going to make it simple and then, bring to you something that would help your trading journey probably for the rest of your life, honestly, because it has helped mine in so many ways. I have a slide just like I always do, and then I'll share that slide with you. Yes, basically it's there. So the slide on top of, the topic for the slide says Forex as an income source. And I'm here to just tell you that, since we are talking about the book, the psychology, our book for the month being the psychology of money, I'm going to mention this and mention here for once. Nothing beats, the finance world, right? Nothing, no occupation, nothing is, spoken about, or nothing can change the trajectory of a man's finance like the financial world can. I hope you understand. Now, why exactly am I saying this, right? The interesting thing is,
Trading is a mind game, you heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind,
hello?
fix your trading.
Hello, can you guys hear me? If you can hear me, give me some ones in there. If you can hear me, give me some ones. All right, awesome. So let me just bring in this story, as fast as possible. In the first, page of the book, talking about the first chapter of the book, it made a very interesting story about two specific individuals. It talked about one, a man named Ronald Reeds, right? And then it also talked about a man named Richard Fosco. Now, let me just bring in that story, and then, I'll move to what exactly I'm going to be talking about, right? Now, it talks about Ronald Reed being an individual who was literally a gas station attendant, and he worked there for 27 years. And then also, secondly, he also worked 17 years at JC Penney as a janitor. So the man was literally cleaning floors, right? Now, let's pin that down for a moment. Now, let's talk about Richard Foscone. Richard Foscone was everything that Ronald Reed was not. That is what the book is saying. He was a Harvard-educated Merrill Lynch executive with an MBA. Now, this man had made so much success in the finance world, so much that he retired in his 40s to become a philanthropist. Now, guess what? At a point, his decisions actually made him lose everything and, came tumbling towards the downside. Whereas the individual who had no financial knowledge, no financial backing, nothing at all, rather came on top. Now, how does these two stories, come in play? This man borrowed a heavy sum of money to furnish an 18,000 square foot home, and then the home had 11 bathrooms, 2 elevators, 7 garages, and it cost more than $90,000 to maintain the house every single month. Whereas for Ronald Reed, he was just living a simple life. Now, the interesting thing is, when Ronald Reed actually demised, or when he died, that is when he came into the papers, and then we heard that this man was worth $8 million. Now, it was really, really surprising. And then he even donated a major portion of that, to charity. And people were asking the question, how come that this person who has no financial knowledge, no financial backing, nothing at all, has a story like this and owns such an amount? Guess what? It was his behavior towards money. This man was patient. This man was just investing, and then whatever came in, he just invested and awaited for his returns all through. And naturally, in today's time, we would want to, do certain things, like change things around us. He was not in to impress anybody. He was just moving along a particular trajectory that he had cut for himself. The man had a plan, and that plan, he followed it through until his dying day. And that made him one of the very wealthy people out there. What am I trying to say? Your behavior, no matter the industry that you find yourself in, your behavior, right? When it comes to the finance world, it is your behavior that moves you forward. If you can have whatever it takes, you can have all the knowledge that you possess, but your behavior is what is going to determine if you're going to move forward or you're not going to move forward. At the end of the day, this man died as a wealthy individual, and then gave most of his money to charity at the end of the day, right? Now, coming into that particular space, it means that having a plan when you are on a particular trajectory, or when you are doing something, having a plan is very, very essential, right? Now, let's move on. Having a plan is very essential. What I want you to understand is individuals who build a system. What is a system? A system is a trading strategy. You need two things in trading game. You need a system that has been developed, and then you need a mind game. So that is why we all are here to constantly listen to how to play the mind game when it comes to the market. Why? Because we need 10% only of a system that has been developed to approach the market, but the rest of it is what is going to be a mind game. Now, you realize that I left out just 10%, right? Now, that 10% is what I call bringing in the edge. So 80% of the time, you're going to be dealing with psychological aspects and then everything, right? 10%, your system that has been developed. But there's another 10% that that has to do with your edge. Like, how exactly are you going to be placing this, like from top to toe? We know that you have a trading strategy. People have trading strategy and they are still failing. Why are these people failing? People have a trading strategy. They have a good mind game, like in the market. But at the end of the day, they are still not being able. They go up and then they fall. They go up and then they fall. So there is a missing piece in there, and that is where edge comes in. I hope you understand. Now, what is basically an edge? An edge is simply having, like an upper hand over one thing, or one thing, the high tendency of one thing happening over another thing. So if you are in the market and we say you are having an edge, it means that you are having an edge over positive happening more than the negative happening to you. Now, how exactly would you as a trader be able to know that, okay, so the positive, or be able to have that system where the positive would constantly happen to you? When I say the positive, I mean profits coming in along the way more than the losses will be coming in. It means that you have to understand certain key principles that comes along with the market. What are these principles? Then now you draw a trading plan around the principles. So I hear a lot of people say that, okay, so when it comes to the market, you basically don't have to learn and all. No, you have to really, really learn certain things that are that are key. You have to learn about certain things that are very, very key and then pertinent to how you will approach the market on a day-to-day basis. That is where brainstorming comes in. Strategy building in trading involves a lot of dedication to chart work. So you make sure that you put in the work. I'm coming to the trading plan. My session for today is actually, parted into two. First part is what I'm giving you, and then the other part, which would actually give you a step-by-step way on how to draw a trading plan for yourself, will come in next week. So you can't afford to miss out on the next week's, session as well, right? Now let's move on. I just have about 5 minutes to go. Now, good trading goes beyond just the system that you have developed. Good trading goes beyond just the strategy that you have developed, and then the clicks or the executions. And it also goes beyond the trading psychology or following through the plan. Edge comes in there. Discipline comes in there, right? Now, I have just 5 questions that I'll pin and then put here for everyone to read. And then I'm going to talk about that. But if you are going to have a trading plan, there are 3 components that I need you to look out for. Everybody listen to this and write it down. If you have any trading, if you have a trading plan, these are 3 things that you should pin in there. 1, your entry. 2, your exit. And then 3, your risk. That is why Ivan talked about risk in here. So you need 1, your entry. 2, your exit. And then 3, your risk. If you have a good strategy should give you your entry point. Where should I enter the market? And then it should also be able to tell you, when do I exit the market? So most of you have an entry criteria, but you do not have an exit criteria. So at the end of the day, you enter the market, and when it's time to get out, you don't know how to get out. So you sometimes stay in a trade that was supposed to give you maybe 100 or 50 pips, 200 pips. The trade comes all the way back and then takes you out of entry. Sometimes you stay in a trade, and because you don't know how to exit, out of a particular trade when it comes to trade going against you, right? You end up watching a trade for it to come all the way to hit you out of your stop loss area, when probably you could have just had an invalidation that shows that whatever you are looking out for at a particular point in time has been invalidated. Therefore, there is a high tendency that market will definitely come to your stop loss level. Even though this is unconventional, it has helped me sidestep a lot of losses in the market, unnecessary losses for that matter. So at the end of the day, entry, exit, and then what? And then risk. Now, when you pick entry, you can now, break it down and then talk about what kind of entry models that you are going to have in the market. Is it risk entry that you are going to be doing, whereby if market just enters your region, you are just basically going to jump in that particular trade? Or you are going to have a confirmed entry kind of approach to the market, where you wait for market to get into your zone. Once market gets into that zone, then now you think of what confirms that this is actually a true, to the direction that I'm looking forward for market to get into. Then we go to the pairs that you trade on the market. So we are talking about pair specific rules that you draw for yourself. Don't worry, next week I have all that planned. Everything is on there. I will not give it to you today. Definitely next week, then I'll give all that to you. We talk about asset classes that you are going to be trading. You know that people who trade gold should approach gold in a manner that people who trade GBP USD are not going to approach that particular trade, because these are two different assets that we are trading. One is extremely volatile, the other not so much as volatile as what the former. I hope you understand. So every single thing that we are going to do next week has to do with drawing a trading plan, and I've arranged it in such a way that it would definitely help you as an individual. You need a plan as a trader to move forward. You need a very solid plan, and not just any plan, a plan that is detailed for you to move on. And I know that personalities are entirely different. So defining your personality has a high contribution to the kind of trading plan that you are going to be doing. So it is made specific so that I'm not spoon feeding you. You are going to be the one who is doing the trading plan, but I'm just going to be guiding you to draw your trading plan. Your goals and then all are gonna be tied in there. So I'm gonna leave these 5 questions, for good solution to everyone who is on here until next week when we come in to do our trading plan. 1, what am I doing? Ask yourself, that can mess up my journey. Whatever trajectory you are on, whatever journey you are on, that you are embarking on at the moment. What am I doing? What are you doing that can mess up that journey for you? And then the second question is, if you repeat what you did last week while you are on your journey for the rest of the year, where would you be? And would you be happy about where you would be by the end of the year when you repeat the same thing? When you woke up on Sunday and you woke up on Monday, you did what exactly you did on Tuesday, Wednesday, Thursday, Friday. The kind of, like things you expose your brain to, the kind of videos you watched, the kind of books you read, or if you did not read anything at all, it all boils in there, right? 3, if your future self met you, will he or she be proud? If your future self met you, will he or she be proud? 4, what dream are you giving up? What dream are you giving up for whatever you are doing currently? What dream are you giving up? And then the final one, what will you focus on if you were not afraid of failing? What would you focus on if you were not afraid of failing? Thank you so much. My name is Emmanuel Napo Ado, popularly known in the industry as Kema Trades. I am handing over the segment to Cliff Cheqona.
My losses are lessons that make me a better trader. I arise after every setback, stronger and wiser. I do not fear failure because I am built to succeed. I learn, I adapt, and I grow every single day. I am resilient. Nothing can break my focus. I trade with patience. I know the best opportunities will come. I am steady, consistent, and emotionally strong. Now, before we go on, I want you to keep this in mind, that though the righteous fall 7 times, they rise again. Now, I want you to keep on repeating this after me. I trust God's plan for my life and my trading journey. I am blessed and favored. My trading is a tool to create blessings for my family and generations to come. God has equipped me with wisdom, strength, and favor.
All right. Again, I want to just thank each and every single person that came before me. Guys, God bless you. I think that God has blessed us with too many people with wisdom in this community. I was listening to Ivan and I was listening to Willis. And of course, I was also listening to Kema. And it's like, even me, myself, I get surprised. I don't know what is coming next again, bro. You just come on and you just teach something. And I'm like, wow. I wish everybody could hear this. Again, God bless you. God bless you. God bless you. And God bless everyone as well. Thank you so much, Charles. Thank you so much, Ivan, Kema, and then Willis. Guys, can we just drop some number ones in the chat to just say thank you to these individuals? We are trying as much as possible to make sure that today we will just keep in a time range because we literally just came off the onboarding call with the family also as well. So we don't want to take too much time today, but I hope you guys are learning something. I really hope. I genuinely really hope. Okay. First of all, I just want to ask this question before we go on. How are you guys doing? How are you feeling before we go into today? You know, what did you learn from Kema's segment? Because as much as we would like to just come and do boom, 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 we genuinely really want people to understand what we are doing here. You know, sometimes when I get to see some comments on the YouTube channel, those who don't know what we are doing, they get a little bit confused. Some people even get irritated to the extent by saying something they don't even understand. Sincerely speaking, this is something very new. Not that new, but it's new to me because when I was coming into this industry, I didn't get a channel like this to follow. I'm not gonna lie to you, whereby you will find people who have this amount of knowledge. And those of you who knows Kema, you know, guys, he has his whole entire community, and yet he still have so much love for the TP family to come and do this with us every single week. You know, Ivan as well, you guys already know the last time he introduced himself, he didn't want to say it, but the director of, risk as well, he didn't want to say it. Willis, an amazing leader as well, who also leads a community on his own. And then we have every single person on this team that sacrifice day in, day out for what we do. So we just want you guys to know that we are doing this because we believe there is a reason for this, and we're going to keep on growing. Today, I have the most important part of this segment in my lessons area, not the whole entire TP Masterclass, but all the episodes in my segment area. We have learned a lot. We have learned about building structures. We've learned about financial thermostats, and I've seen all the testimonies that is coming from this segment, and I understand that. But today we're going to be learning something very important that it took me a long time to understand. But before I go on with that, while we're coming on this live session, there is something I want you guys to listen to this carefully now. And if you're hearing me, I want you to really, really, really pay attention. Listen to this carefully, guys. You see, this masterclass and what we are doing here, this is not a competition. This is not to compare me or your channel to your favorite mentor or your favorite mentor to me or me to it. That is not what TP Masterclass or TP family is all about. In fact, I don't know about you, but this year and for the rest of the year, I'm sick and tired of seeing people always being heartbroken because they have not been able to come in contact with the structured knowledge that will be able to help them to become the traders they want to become. Some of you guys have been trading for a year, 2, 3. It doesn't seem like something is changing. I get all of that. I am, we as TP family over here, we are not in the same mode of trying to compare. The Bible says something very interesting. It says, those who compare themselves to themselves are not wise. In this industry, one of the things you will find out is who bought the Lamborghini, who bought the Mercedes, who bought this and who bought that. And I will not sit here and make it sound like as if I did all of this because I am somebody who likes to stay away from that. No, guys, I was convicted. I remember very well when we started building this brand about talking about just psychology. At some point, I was so tempted to show how much money I made in a week, to show how much money I made in a month, to take a screenshot to show people I'm also making money and stuff like that. And I'll not forget the Holy Spirit convicted me. And I realized that it was not the right thing. Sometimes I can go to one of the most amazing gala in my life, whereby the people who are sitting in the room, I am so tempted to take a picture to come and show we were in this room. And I would take the picture and I cannot be able to post it. And I didn't understand why it was like that. And I realized that in this industry, a lot of people think the faster you can show that you are also making money is the satisfaction you get. Let me ask you this question. How many doctors do you see every single week, every single month, every single day, cutting the heart of the individual they are performing surgery on to post it on Instagram and say, look at, these are the 5 hearts I was able to operate on this week? You don't see that. Normally, it's even in trading. How many times have you seen Warren Buffett comparing himself to Ray Dalio or Jim Simmons, saying that I'm one of the best traders in this world. They don't do that. Those who compare themselves to themselves are not wise. I don't want you to be the kind of trader that wants to rush to show people you are also making money. You will not grow like that. I understand there is a culture in this industry. That is, how fast can I be able to show I also got into the private jet? How fast can I be able to show I also be able to bought this thing? That is not how you're going to grow. Focus on your journey. Don't let the naysayers make you believe you're not growing just because you're not also having the fast time to show your car. Fix your milk problem first. Fix your bread problem first. Fix your bills problem first. Don't be in a hurry to show you also bought a mansion. Ladies and gentlemen, listen, when I was coming on this live session today, I was very angry in my spirit, and I said, God, I'm praying that people will understand that trading is a personal journey. Only you know why you started trading. You probably started trading because you just want to be able to get by in the day. Start hitting that goal first. And if you don't know how to set a goal, you may have heard me say this before, that we set a goal in a structure called the SMART criteria structure. S being specific, M being measurable, A being achievable, R being relevant, T being time bound. This is how you set a goal. We'll talk about that later down the line. This is not my message yet. I want to be able to let you guys understand something. When we say time frame, you may have heard this before as a trader, that they call something time frame analysis. Is that true? Time frame analysis. Now, some people ask, Cliff, what time frame is important for me to be able to focus on? When we say time frame, what is the most important thing for me to focus on? I'm not teaching on time frame analysis today, but I want to use that and borrow that as an analogy to teach you guys something, to understand how your process and your journey will be. Listen to this carefully now. When we say time frame, it simply means you are framing a time. Every single time you frame a time, you shift the idea from being a general concept to a specific moment. So let's say, for example, you come to me and you say, Cliff, I want to become a footballer. If you want to become a footballer, there is a level of structure that you need to be able to build to become a footballer. Are you listening carefully now? That means you are going to have to train. That footballer is going to eat. That footballer is going to shower. That footballer is going to rest. That footballer is going to laugh. That footballer is going to be angry or irritated at some point in their life, a footballer. But your overall goal is to be able to one day find yourself playing one of your favorite clubs in this world. But in order for that footballer to be able to achieve his or her goal, that footballer needs to operate from a specific time frames. That means that footballer must sleep for 6 to 7 hours time frame. That footballer must take their shower for maybe 15, 20, 30 minutes. That footballer must cook. That footballer must train. All these several time frames are focusing on several things to lead to one goal, to be able to achieve playing in a football club. If that footballer is taking a shower for 4 hours, we need to go and find out what that person is doing in the shower room. Because as far as time frame is concerned, you need to commit just 15 minutes or 20 minutes or maximum 30 minutes to shower. If that footballer is laughing with his friends, he needs to laugh maybe 1 minute, 2 minutes, 3 minutes. If you laugh for 15 minutes straight non-stop, we need to find out if psychologically you are okay. If that footballer is eating consistently for 4 hours straight, in terms of the law of time frame, there is an error. So if you ask me, Cliff, let me bring that even into trading. What time frame should I focus on? Every time frame is important. It depends on what specifically you are looking for. If you're looking for the overall structure of the market, there are something called higher time frame. You want to see the bigger picture. If it is about seeing what the market is doing in a very little micro perspective, like laughing, like cooking, like showering, you go to a smaller time frame. So every single time frame is important as a trader. But I am borrowing that concept. We'll talk about the psychology of time frame analysis later down the line. This is me just trying to let you understand every single thing you are doing now in respect to your growth as a trader. All of it is important. Number one, you are on TP Masterclass for 2 hours. You are learning. After you are done, you pick up the information you learned and you meditate upon it for 15 minutes. You are revelating yourself. Does that make sense? Then at the end of the day, you go and you rest, you wake up, you do planning, as Kema was saying. So all these things, framing a time in specific regions, eventually leads you, because the goal is for you to become a successful trader. So time frame is a mystery. It is what makes you kill every single thing. And in trading, listen to me carefully now, guys. A lot of people are not getting the results they want because they have not decided. They have not decided to become a trader. You want to see how it goes. Maybe you want to know if you can become successful or not, but you have not made a decision to become a trader. When we say to decide, what does that mean? You may have heard me say this before. Pesticide. If you remove the word side, it means to kill an insect. Sorry, to kill a pest. If you say insecticide, it means to kill an insect. If you hear the word homicide, it means somebody has killed someone. So if you hear the word decide, it means somebody else is deciding something and killing everything that will stop them. A lot of you guys want to make money from trading, but you have not decided to become a trader. When you decide to become a trader, there is a specific time framing structures that needs to be in place for your trading. For your trading. So when you decide you want to become a trader, the overall goal is to become a successful trader. Okay, that is the long-term goal. What are the several things I need to do to structure my overall growth to become a successful trader? And I believe somebody needs to hear this. Ladies and gentlemen, you need to be hungry enough. We are in the first day of March. Be hungry in your heart and say enough is enough. Be hungry enough and say enough is enough. You have followed the so-called gurus, the so-called I have the money, I'm the one who is best, I'm the best this, I'm the best that. You have followed all of them. Is your life changing? If the answer is no, then grow up and get out of that area of competition. This is your life. Charge yourself up, remove yourself from distractions and grow up as a trader. The industry is not complicated, but it can get very difficult if you don't want to learn and grow. So that is why on this masterclass, believe me, this is not a regular way I would like to do this masterclass, but it's not about me. So in order for you to grow, everything when it comes to trading, it's not a buffet of education. It's a structured, holistic structure of a body of knowledge. Now, if you are ready to be able to grow, to become a trader, growth. Put growth in the comment section. If enough is enough, ladies and gentlemen, this year you need to be hungry enough and say, man, you too, you will become successful. And you will learn, you will grow, you will get the right mindset, you will subscribe to structures of body of knowledge, the truth. No more nonsense. No more nonsense. Believe me, guys. No, I know people will sometimes say, oh, go and learn strategy. They don't understand what they are saying. Go and learn strategy. Go and do this. What about this? They are competing. ICT, blah, 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 blah. Enough is enough. Enough is enough. This is the season you need to let go the opinions and subscribe to truth. If what Cliff is saying is not true, God will not even waste your time. He will not let you come on this live stream again. Believe me. So you pray about it, Father. This information Cliff Cheqona and the team is talking about, is it true? If it's not, don't let me waste my time. Okay, God, where do I go to? If Cliff is lying, who should I go and learn from? You are subscribing to the right information, don't waste your time. Today we are talking about something very important. Now I'm about to teach now. In fact, if you're ready to learn, let me know in the comment. I know. If you're ready to learn, let me know in the comment section right now. Are you ready to learn? Are you ready to learn? You're ready to learn, yeah? Let me look into the comment right now and let's see how many people. If this is your first time joining TP Masterclass and the TP family, our session, just let me know that I'm new. Let me see. I want to say hi to you. Let's welcome you. As TP family, we welcome people like that. We're about to learn it. How many? If you are new today, just let me know if you are new. If you are not new, is there any person who is new on this live session? Oh, Chris, Noel is new. Guys, can we drop some number ones in the chat for all those who are new? Let's welcome them as TP family. Let's show them love. Let's show them love. Let's show them love. This is their first time here. Let's show them love. Today, I told you guys, as I promised, we are about to learn something very interesting today, and I titled this. Today, I titled this message today, very, very, very powerful message you're about to listen today, and you will never leave this live stream again. I want you to put in the comment, I will never leave this live stream again. I will never leave this live stream again. I will never, ever, ever leave this live stream again. So welcome to every single person. This place is your home. This channel is not about Cliff Cheqona. It's about the growth for individuals, and that is what we do. The vision is clear. We want people to grow and become structured traders. I don't want you to be an ignorant trader. I want you to be a trader who has confidence in what they are learning, so that when you go on Instagram, you are not fooled. When somebody asks you what is a broker, we know that. Let me even do a quick 101. Let's do a quick 101 right now. Let me know TP family is learning. How many types of brokers do we have? How many types of brokers do we have? How many types of brokers do we have? Let's see if TP family is learning. How many types of brokers do we have? Let me do 101. How many types of brokers? Let's see if TP family students and family people are really learning. How many types of brokers do we have? I've taught this before on one of the master classes. How many type of brokers do we have? I know some of you guys, you are lagging. Don't worry, I have the time. A book and B book, amazing. Give me more, give me more, give me more. How many types of brokers do we have? This is their mode of operation. When we say A book and B book, that is even another type of conversation. We'll talk about it again. But what type? How many types of brokers? Can we name them? Remember, I told you guys that we have a couple of few type of brokers. We have what we call the market maker broker. Is that true? We have what we call the market maker broker. The market maker broker, and we have STP or ECN brokers. Then we also have what we call the hybrid. The hybrid. So it is very important that you understand, why am I talking about this? But Cliff, how is this important? It's very important. You need to become equipped. You need to become structured. You need to have knowledge, so that when you go and somebody is telling you about things, you need to know how to be able to find, quote unquote, the right brokers. Does that make sense? So I don't want you to go out there. When we say the hierarchy of the financial market, how many players do we have? 5. We learned. Can you name some of them? We have learned about it as well. 5 players in the hierarchy of the financial market. Why is this important? It makes you become a trader. It makes you speak like one. So 5 players, can we name it from the top? At the top of the hierarchy, who do we have? At the top of the hierarchy, who do we have? At the top of the hierarchy, who do we have? This is TP Masterclass 101 test before we go into today's lesson. At the top, the first in the command. Yes, I know. Yes, let me explain why it's important. It is very important that you understand the difference between the brokers, so that when you ask Cliff, what type of broker do I use? Because number one, when we talk about a market maker broker, listen to this carefully now. A market maker broker is the type of broker, okay, that has their own liquidity in-house. What is a liquidity? A liquidity is not necessarily money, but a liquidity is the how do I put it? Is when a broker or a funding corporation is able to convert assets into liquid DT. Does that make sense? And so listen to this carefully now. When we talk about a market maker broker, they are the type of brokers that they have their liquidity in-house. So what that simply means is that when you click buy and sell, listen to this carefully now. You may have been clicking buy, sell, buy, sell, buy, sell. Have you asked yourself before, when I click buy, how is it that my order has been activated? How did my order get activated? You click buy and your order has been activated. It has been activated because why? Number one, somebody at the end of the tunnel received your order. And so every single time that you click buy, at the other side of the road, somebody needs to accept your buying and sell to you. So a market maker broker, they have liquidity in-house. They don't pass your order to somebody. Let you understand this. Let's say you sell ice cream and I come to you and I said, have you ever, a lot of people from Ghana, Nigeria will understand this a lot. Sometimes you can go to the market and the person you are trying to buy the foodstuffs from may not necessarily have the foodstuffs, but they know somebody beside them who has the foodstuffs, and they have network with that individual. So they will tell you, what do you want? Mangoes? No problem. They don't have it there, but they will tell you they have it. Then they will go and get you the mangoes and sell it to you. If you have seen that before, drop some number ones in the chat. So you went to this individual to buy mangoes. They don't have the mangoes, but they will still sell the mangoes to you. And there are people also, they have the mangoes. They don't need to go, does that make sense? They don't need to go and then find you the mangoes from a different brokerage. Let me put it that way. So the market maker broker is the one that has the things you are looking for. They don't need to go somewhere else to go find the money, or sorry, the mangoes for you. Then the STP or the ECN, okay, they don't have the liquidity in-house. So they will connect you, okay, they will connect you to the market, but they need to be able to outsource their liquidity or their LP, we will say, from another source. Why is this important that you understand this? So that when you are choosing a brokerage, when you are choosing to partner up with a broker, you are not basically doing it ignorantly. You are understanding, oh, okay, so which one do I go into? Okay, this one, that one is very important. Imagine maybe right now, let me ask you guys a question that we'll go on to today's lesson. Did you know that if you pull up the graph of the financial market, whether trading view or whatever, and you show it to a doctor, that doctor will not automatically say this is gold chart. They will call it ECG. Why is the person calling it ECG? The person is calling it ECG because in the language, in the medical field, that is not XAU USD. Are you with me? So why is it important that as an individual, you understand the terminologies in trading? Because trading is like learning a language. You need to learn how to speak it. So don't remove some of the things from the things you are learning and think some of them are not important. That is why you are not confident enough to make decisions, because you have zero convictions. So if you want to be able to learn how to speak any language, the first thing a teacher must teach you is what we call alphabet. Whether it be in A, B, C, D, whether it be in any language, they teach you alphabet. And when they have not taught you alphabets, they show you how to be able to use those alphabets to form words. They are not necessarily a speaking language yet. They are just words. Apple, banana. Does that make sense? Then after you have been able to learn how to speak words, they now categorize these words. They will tell you some of them is called a noun. Some of them is called a pronoun. Some of them is called an adjective and a verb. Why are they categorizing it? Why are they showing you the meaning of all this? It will make sense in the future when you start speaking. Then we move on to something called sentence formation. Sentence formation is now you adding several words together to make sense. Okay? So you can say, if you say the boy is the market going, you have generated a series of words together, but it's not what we call the right grammar. The boy is the going the market. It's not the right grammar, but you have added words together to form a sentence. In order for you to be able to speak the right sentence, you are going to be able to have to speak what we call grammar. So now you speak well, you add the nouns, the verbs, the adjectives, every single thing coming together as one to form what we call the right grammar. Same thing in trading, ladies and gentlemen. You cannot pinpoint every single thing. How old are you and how long you were trading? Listen, guys, let's pay attention right now. We'll come back to this question. If you want to know how old am I will answer that at the end of the day. But let's just focus on the lesson, okay? No more distractions in the comment, please. Now, at the end of the day, one thing that you need to be able to understand is this. Number one, after you have been able to understand all this, it comes into the place of you structuring it. Same thing in trading. It's a body of knowledge. It's not a buffet of knowledge. You cannot be able to isolate some of them and so on and so forth. Now, today, the topic that I'm teaching is one of the most important topics ever you're going to learn. But this is one thing I want you to be able to understand. I'm going to share my screen and I want you guys to understand something. I don't know if you guys may have seen this on my channel before. I don't know if you guys have seen this on my channel before. But listen to this carefully now. We call this the cheat sheets of the Wall Street. Now, after that, I will show you the topic for today. Okay, just stay with me. I'm going to bring it up on the screen right now. And I want you guys to listen to this carefully now, please. I'll be teaching now, so please pay attention. Okay? Don't be distracted. If you can see my screen, drop the number ones in the chat. If you can see my screen, drop the number ones in the chat. I'm teaching something very important today, and I want you guys to be very, 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 very. If you can see my screen, drop the number ones in the chat. Okay? Perfect. This is what we call Wall Street cheat sheets. It's called the psychology of a market cycle. Now, in every market cycle, it is very important that you understand what you are looking at here on the screen today. Please avoid every distraction. Anything that will be able to distract you today is a spirit. And that spirit has not been the name of Christ. Wall Street cheat sheet, psychology of a market cycle. Listen, ladies and gentlemen, being in this industry for more than a decade, I can tell you for sure that if you don't allow yourself to come into the reality of the market hierarchy, you will think you are always in control. You see, when we get to the topic of cognitive biases in the future, you will understand a lot of things. Every single market cycle, including BTC, every single market cycle, including NASDAQ, every market cycle, including all your favorite assets, whatever it is, they always start from what we call the disbelief. Every single one of these points you are seeing over there is a structured cycle of the human behavior. So while you are calling it higher high, higher lows, it is a body of emotions also coming together. What you see over there at the first bottom is what we call the disbelief stage. The disbelief stage is where every single person or most people don't believe that the market will do what it's supposed to do, which is fair enough. Okay? Because we don't move the market anyways. So fair enough. Then from the disbelief stage, it goes to what we say the hope stage. The hope stage is where the individual is just now starting to believe that, okay, I mean, something good may come out of this thing called BTC. Okay, let me use Bitcoin as an example because it's the most general crypto example I can give right now. So, okay, I think that, crypto can go up. So now the person start believing, man, this rally is real. But the person probably has not entered the market yet at that time. He knows that the strategy and the structure and the system is telling him to buy. But he didn't buy it because he was afraid, what if I enter now and it kicks me out? Then after the market now hit a certain point, listen to this carefully now. Some people will now enter here and they will get out here. Listen to this. I don't know if you guys can see my screen. Some people will now enter here and they will enter here as a buy and get out here as a stop loss. Then when they start going up here, they are now afraid. What if I enter in again and it kicks me out? So we call that stage a thrill stage. He says, I will buy more, okay, on the margin, right? And tell everyone to buy more as well. So you will find out your favorite mentor is telling you buy now. And that buy now may have already hit a peak that is about to reverse. It's called the euphorial stage. During this stage, the market will now hit only probably TP1 and reverse back to your stop loss. And then you think, oh, hey, you know what? It's going to now sell. And then you will get in and it will go up. And you will think, oh, it's going to go up. And you will get in from the complacency stage and it's going to come down. And now when it's coming down, you are afraid because of loss aversion. Remember loss aversion? Loss aversion is the tendency of when your desire not to lose become greater than your desire to gain. Everything that you are learning on this masterclass, please take note. They all come together. So now you are complacent. Man, then immediately now that you remove your stop loss, you keep on dipping on you. And you keep on remove the stop loss and now you are anxious, denial, you panic. And then you are now trying to capitalize. What is capitalization? It is when now you are like, you know what, at least let me take the loss like that. All right, let me take the loss like that. And now as soon as you take the loss, it will now play around. And then the moment you now get out after you are angry and you hit depression stage of, man, I've blown my account, the market starts going up again. It's called the psychology of a market cycle. Every single thing that you are seeing here right now is an emotional state. Almost 99% of retail traders will go through. It doesn't matter even if you have been trading for long. If you stay away from your system, this will be your reality. I promise you for sure. That the time you're supposed to get in, you will not get in. You will get in the time you're not supposed to get in, all because of emotions. And that is why emotional intelligence is key. Emotional intelligence is key. And so one of the things I cannot bypass when it comes to understanding the psychology of a human behavior is how then do you become emotionally intelligent? So the topic for today, as usual, we cannot be able to talk all about emotional intelligence today. So I'm going to basically group it into several parts. Today, we are talking about emotional intelligence part 1. Please write it down. Emotional intelligence part 1. Emotional intelligence part 1. You see, when I started talking about psychology in trading, a lot of people will fight me. They will try to make me feel like I'm crazy talking about psychology that way. Why? Because we talk about psychology beyond an abstract concept. Yes, we talk about psychology beyond an abstract concept. The reason why we talk about psychology beyond an abstract concept is because you can truly practice things that will fix your mind. You see the way you go to TradingView and you can study a pattern and say, you know what? I think this market structure today, I am seeing an accumulation, happening right now. And every single time as a trader, you are seeing accumulation happening. It means something is about to happen in the market that after the orders has been all received, it will now spike up as a move. That move, we retail traders are calling it what? We are calling it an imbalance move. Why? Because an imbalance move is a move that came from a balance area. So every single time you see a consolidation happening and so on and so forth, sideways in between there, the market now move with a spike. Come back down again, you will say, hey, it's coming back to retest on an FVG area. Then we'll go to my direction. When it starts to go to that direction, we call that phase a markup phase. So you can consider that as whether higher high, higher lows, and it's going up. Then we get to a distribution area. But before the accumulation area to the distribution end, a lot of things happens in there. Let me tell you something, guys. I want to ask you something right now to understand why it's important you study emotional intelligence. Let me just keep quiet right now and calm down and listen to this carefully now. Listen to this carefully now. I want to talk to you guys for a second. Listen to this carefully. Let me tell you something. Listen to this carefully now. Listen to me seriously, please. It's very important that you listen to me. If in case you have $1 million today, listen to this carefully, please. This is the part I want you to avoid all distractions. If you had $1 million and that $1 million that you have in your hand, I tell you, let me ask you guys a question. If you are somebody that you are trading NAS 100, if you are trading NAS 100 right now, where do you think NAS 100 will be by the state of how the world is moving logically? Where do you think NAS 100 will be by 2030 if Jesus tarries? Can somebody give me the answer? Where do you think? Just don't give me terminologies like market, markup, whatever. No, just logic. NASDAQ is the compilation of several different companies in the United States that functions in the digital tech world. Where do you think, based on where the world is going right now, where do you think that NASDAQ will be by 2030? Don't even give me the price. Is it going up, or you think the market is going to crash? So according to Anointed Zillionaire, he's saying 100K. Okay. What that simply means that he's saying NASDAQ will go up. Let me ask you guys a question right now. If you had $1 million in your account, and if you are investing in that trade for 0.10, or let's say even 1.00, do you think that if you have 1.00, you can be able to hold that trade as long as you can to be able to do what you are saying you will do? Please just answer this question with understanding. You will get what I'm about to teach you today. If you are going to be able to have $1 million, can you be able to enter that trade with a good lot size, make good money while you are not panicking? Is that true? You will not panic. In fact, you are going to be able to hold the trade very well. Is that true? You will not panic. Even if they tell you Nasdaq is dropping, you will not really feel any emotion because you know that you have good amount of money that can hold that trade. So what that simply means is that we retail traders, because we don't have buying power, that is why we learn the way we learn. The way we learn is not the way Warren Buffett trades. The way we learn is not the way the big boys trades. We don't have the buying power. We don't have enough capital to make crazy amount of decisions. So we are creating concept, whether price action concept. That's what Kema was saying, edge. Whether it being, institutional way, concept. We are creating concept to be able to make decisions on a micro way. So you are trying to risk 50 pips to catch 100 pips, 50 pips to catch 200 pips. It is the way we trade, is why psychology is very important. It's also important for the big boys, but from our side, you are trying to survive every day while you are capitalizing with the small that you have. We are playing a speculative game. We are speculators. In this industry, we have something called the speculative assets and the productive assets. We are trading the speculative assets, meaning whenever it's buying, you can buy. When it's selling, you can sell. So the reason why it's important you have the right mindset each and every single day is because you're about to make emotional decisions over and over again. You buy, it kicks you out, you wait for the right move again, and then you go in. Psychology, you need to be mentally strengthened. Not because that is the way it was supposed to be, but unfortunately, we as retail traders in the hierarchy, we don't have the buying power. Are you with me? So when somebody says trading is complicated, it's not true. Trading is not complicated. It's only difficult for us mostly because of the mental capacity you need to survive as a retail trader, because at the bottom of the hierarchy, that is where you are. If you guys are understanding this, drop some number ones in the comments. So when you are learning psychology understanding, it's not because that is how it was meant to be. It's because unfortunately, we don't have a fair advantage in this industry. Brokers don't care about you. The market doesn't care about you. Even though you can be able to make money, nobody in this industry cares about you from the hierarchy point. They don't know you. They don't care about you. You are trying to benefit from the industry. So you need to be able to understand you have an unfair advantage. And one of the ways to survive is by having emotional intelligence skill set. Let's now teach now. You see, it's funny that I've not even started this whole entire lesson yet, because the kind of level of things you need to teach for the average retail trader to understand this concept is a lot. But we are going to go on. Before I go into emotional intelligence, it's better that you understand first that we need to break down what emotions really are. Guys, listen. I hear people sometimes saying, me, I'm not emotional. You saying that is not a cool thing. I'm not an emotional person. Emotional intelligence is not about not being emotional. It's not true. Let me explain what emotions are. Emotions are biochemical reactions. Please write it down. Please write it down. When we say emotions, what are emotions? Emotions are biochemical reactions. Emotions are biochemical reactions. Where? Where do you find emotions? Is emotions in your mind? Is emotions in your eyes? No, emotions are in your body. Those biochemical reactions are found in your body. They are found in your body. And those biochemicals are triggered by thoughts, experiences, and expectations. Those biochemical reactions in your body are triggered by thought, experiences, and expectations. This is how I explain emotions to individuals. Emotions is what makes you a human. Emotions is what makes you a human. And we have two different types of emotions. we have what we call the basic emotion, and then we have what we call the complex emotion. What is a basic emotion? A basic emotion is, anger, happiness, joy, fear, sort of nervousness. All of that are basic emotions, meaning it is normal for you, the human being, to feel that certain type of emotion. Basic, and then in that order, all right? So fear, joy, all of that. Then we have what we call the complex emotion. Okay, so let me explain that for you to understand today on this call. Let me take my time. It is very important that you understand this. Listen to this carefully now. So we have what we call basic emotion. Then we have complex emotion. Let me share my screen and list it here. Much more better. All right. Give me a second. Give me a second. Give me a second. Give me a second. Let's share my screen. There you go. Can you guys see my screen? Perfect. So we have what we call the basic emotions. So basic emotions are the emotions you feel, like fear, joy, happiness, all of that. Then we have what we call the complex emotion. So the emotion is a type of emotions that came out of basic emotions. So in order for a complex emotion to be formed, we need to have two or more basic emotions coming together. Are you with me? We need to have more than two basic emotions coming together. We need to have two or more emotions coming together. So number one, as I said, what did I say? We have fear, we have joy, we have all of that. Now, in other words, let's pick up regrets as a trader. Why do you feel regrets? Regret is a complex emotion. But in other words, how does regrets form? If you hit a couple of stop losses in a day, let's say you traded during London session and you made money and you went into New York session and you were not supposed to trade because according to your rules, you said you take 2 trades in a day. You already took 2 trades in London session, you made money. But unfortunately, you went into New York session and you wanted to basically take another trade. Now, you know in your heart, you are not supposed to take another trade. You took the trade and you lost the first profit that you made during London session. You are going to have a mixture of sadness. Okay? You are going to have a mixture of sadness. Then another type of emotion you will start to feel is disappointment. What are you going to tell yourself? Why did I even take this trade? And then when you start to see the move playing out probably the way you wanted, you are going to be guilty. So both sadness, disappointment, and guiltiness, right? So now you're going to lie down and be like, oh my God, why did I even take this trade? And it starts making you sad. And so now the cortisols that are coming into your body is now making you stressed from that trade you took. Now, the disappointment right there is going to make you be beating yourself up. Oh man, you're not a disciplined person. You're not serious. You start telling yourself these things, right? You're meditating upon it. Then you're going to be guilty. So these 3 emotions coming together forms regret. And that regret is a complex emotion. This is what you don't want in your trading. This. But whatever you feel, the sadness is normal. The disappointment is normal. The guilty is normal. But when it lasts for too long and the chemicals are released into your body, eventually they create a complex feeling in your body. So if you were a single mom, if you're a single dad, if you were a family and you guys are trying to trade to get by for your family and you hit 2 stop losses and it makes you sad because that probably was going to be a good money to use it for your family, that sadness is not the problem. Is that when you meditate upon the sadness, when you make it goes into disappointment coming together and guilt and it forms regret, now this complex emotion that has been formed will lead to a type of action called revenge trading. Revenge trading. revenge trading. So this is the problem. Basic emotions, 2 or 3 of them coming together when you are lying down and you are thinking. Let me give you an example. This is how basic emotions normally happens to human beings. Have you ever fell down, or have you ever had any type of injury? Let's say your knee will hit a certain type of any edge of any hard surface so hard, and when it hit it, the first few seconds to a minute, you won't see blood. You will see your white tissue. Have you ever seen that type of injury before? Very painful injury. In fact, the first 2-3 seconds, you think you are commando, right? You think, oh man, like this is nothing. Just wait until the pain settle in to come and deliver the pain for you. That is how blowing an account feels like. When you lose a certain account, the first few seconds, you're going to be, even you yourself will tell yourself, if this account will blow, let it blow, right? The few 15 seconds, 1 minute, you think you are a transformed trader. Then after 5 minutes, when you now go and lie down, especially if you are somebody that you use alert on TradingView for your trace, and you did set TPs, right? So now the account has already blown. It kicked you out. Remember our psychology of the Wall Street market cycle structure? It has now kicked you out, and it has now started going up. So you will start hearing the TradingView sound, right? Giving you that awareness that, oh man, your TP1 and your TP2 is hitting. Then there's a sadness coming. Then you start being disappointed in yourself. Why did I even not become patient? But it was not a patient game. Remember, trading is a game of probabilities. You should have risked well. You should have known your entry point. You should have known your exit point. But unfortunately, your cognitive bias didn't allow you to stick to your plan. Now you are sad. Now you are disappointed. Now you feel guilty. And now it has led to revenge trading. Does that make sense? So this is what you don't want in your trading. And there are a couple of few ones that we can even talk about. There is what we call frustration. Frustration is the mixture of anger and helplessness. So anger is when you are in a trade that you know you shouldn't have taken, or you know you should have gotten out, but you are still in because you keep on removing your stop loss. Now helplessness, now there is nothing you can do. You either close a trade or you stay in for it to blow your account. That leads to frustration. Frustration leads to you over leveraging either on your next trade or the same thing. These are things that people don't want to learn. Their mindset is, why do I need to know all these things? Well, without you understanding these things, it is not possible for you to become emotionally intelligent. Guys, there is a reason why there are few minority of people that are able to get by from a financial freedom standpoint. Because people think, do I need to have structures in place to be able to survive in everything I do? Yes. Without structures, it's about you. You remember I've said this before, whether you believe in the law of gravity or not, if you jump from a 50th story building, you will go down. Gravity will not say, oh, I'm sorry, Benjamin. I'm sorry, Clifford. You don't have knowledge about the gravity. So at the end of the day, since you are jumping, we are going to excuse you today and you will land safely. No. It doesn't even matter if the person that jumped from the story building is a baby. I promise you, it doesn't matter. That baby will go down, and as sad and as painful as that is, gravity will not spare that child. Same thing in ignorance. Same thing in the lack of knowledge. You will not survive in this industry without having knowledge. So now that you understand that every single thing we are talking about here is about mindset and every single thing, one of the things that I want you guys to understand next is then what then is emotional intelligence. Part 1. Today, I'm not going to be able to teach you guys a lot about emotional intelligence, but there are a couple of few things I will use as a 101 for you to be able to understand. Emotional intelligence is you being able to be aware of your emotions and being able to interpret it, and being able to be aware of the emotions around you and also being able to interpret it. So Emotionally intelligence is not being less emotional. No. Emotional intelligence is knowledge-based skill sets. So, Cliff, is that why you are teaching us about a different type of emotions? Yes. So, emotional intelligence is not you being less emotional. Emotional intelligence is you being aware of your surroundings so that you know how to interpret the situation. So, for example, if right now somebody goes into a shop and then there is somebody in there who insults this individual, which is you. If that person insults you without no reason, even if there is a reason, if the person insults you, you will be irritated and you will be angry. It is perfectly normal. But if they tell you this person has a psychological problem, so they insult people anyhow, just that knowledge alone changes your mood and your feeling. Why? Because that knowledge has prevented biochemicals to be released into your system. Remember what we said? Emotions, which is a biochemical reaction, is released into your body by experiences, thoughts, and then the things you hear or you see. Does that make sense? So emotional intelligence is knowledge dependent. Emotional intelligence is not being less emotional. No. So a lot of people are asking themselves, how do I become emotionally intelligent when I love people? You can still love people and be emotionally intelligent, because emotional intelligence is about the awareness of your emotions, how to interpret it, and as well as others. So there are four pillars I want to give you today to be able to understand emotional intelligence of that matter. Number one, if we say somebody have emotionally intelligence skill sets, number one, it means it's four pillars. Pillar number one. So why am I arranging it in pillars? Because it's like a foundation. So pillar number one is self-awareness. If we say a trader is emotionally intelligent, it means that trader is self-aware. Self-aware. It means he knows that if he takes 2 trades in a row and he makes money, the third trade he's about to play around. Self-awareness. He knows if he loses 2 trades in a row, it means that he's about to be able to make the next decision a bad one. He knows. Why is it important that in trading, everything has to be awareness? Just like how you are aware of the market pattern, you need to be aware of your behavior pattern. Because in trading, remember what I said, we retail traders, we survive by the concept of understanding patterns, whether market structure patterns, whether risk management patterns, or whether your behavior patterns. They are all important for you to be able to grow. So pillar number one in becoming emotionally intelligent is self-awareness. Do you know why you behave the way you behave? When you make 2 trades in a row and you win, do you know what you're about to do? When you lose 2 trades in a row, do you know what you're about to do? If the market is not moving and it's in a less volatile season, do you know what you're about to do? You write them down. Every single time the market is moving less, I get so bored and I trigger unnecessary trades. You write them down. You are becoming emotionally intelligent. Self-awareness. Are you with me? So number one is self-awareness, recognizing your emotions in real time. You cannot be self-aware without writing your patterns down. So from Monday to Sunday, there are some of you guys here listening to me right now that if you were documenting your behavior, you will know Monday, Tuesday, you are making money. Wednesday, every time you are losing. Thursday, Friday, you are breaking even. By this knowledge alone, you will stay away from the market on Wednesday, Thursday. It doesn't matter even if gold will move 500 pips. Systems, edge, psychology. Are you with me? So self-awareness is pillar number one. It's like building a whole entire structure. So they will ask you, Cliff, how do I become emotionally intelligent? And I'm telling you, the first thing you need is to build your pillars. Pillar number one, self-awareness. What is self-awareness? Recognizing your emotions in real time. Recognizing your emotions in real time. Pillar number two, self-regulation. Pillar number two is self-regulation. Self-regulation is the ability for you to be able to control your emotions. It's the ability for you to control the emotions that you have been able to be aware of. So if you are somebody that anytime you take 2 trades in a row, Cliff, what was my biggest problem in trading as an lack of emotional intelligence? I was always losing more the day or the week I was winning more. Because every single time, have you ever seen people that every single time that they okay, I understand what you guys want me to type, yeah? So 4 pillars. Okay, TP family, interesting. Let me type. So 4 pillars. Pillar number 1 is self-awareness. What is self-awareness? Self-awareness is you recognizing your emotions in real time. Do you know what you're about to do every single time something go well for you? Pillar number 1, self-awareness. For me, I'm the kind of person every single time that I am so hungry, I can be very irritated when I'm hungry. The moment I get food, I don't know where the song, I get creative in singing. Music comes from nowhere into my spirit and I start singing. I have seen food. If this is you, then every single time you win 2 or 3 trades, run the same way as you lose 2 or 3 trades. Because my problem was every time I was winning 1 or 2 trades, the next 3rd or 4th, I'm about to play around, either over leveraging, getting too excited, and I was starting losing. And I will never forget, in 2016, that was what made me lose one of the biggest capital at that time in my trading journey. And so you need to be able to understand your emotionally intelligence, pillars for yourself in self-awareness. So number 1 is self-awareness, the ability for you to recognize your emotions and everything. The second one is called self-regulation. Self-regulation is not self-regulation is you understanding how to regulate your emotions. Does that make sense? So in other words, if let's say you are getting angry after losing a trade or revenge trading, then that means your number 1 regulation mode has to be pausing. That means in your system of trading, pausing must be an important thing. That when I'm training people in terms of psychology, there is something I tell them. People who suffer from over trading, this is one of the things we tell them to do. If you are somebody that you suffer from over trading, we train you by letting you find the most juicy trades, and we tell you stay away. Because controlling your tendencies is not the lack of opportunities. Controlling tendencies is the availability of an opportunity, but you chose to stay away. So a lot of people think that staying away simply means the market is not moving. No, some of you need to stay away even when the move is right. In the beginning, until you become matured in this industry. So self-regulation is after you have been able to identify all the things that triggers your emotions as an individual. You need to now connect them into what will regulate it. Because the controller that we use to regulate fire is not the same thing we use to regulate cold or a heater in a room. It's not the same thing that turns on the AC, but they are all regulators in their individual ways. And are you with me? So pillar number 1 is self-regulation. Pillar number 1 is self-awareness. Pillar number 2 is what we call self-regulation. Pillar number 3 is self-motivation. 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 In other words, motivation. Listen, guys, everybody gets triggered. Everybody gets triggered. For example, myself, doing these calls and doing all these things we do for the TP family. It's not every single person that thinks what we are doing is a big deal. Some people just come and they watch a video for 15 seconds, 20 seconds, 30 minutes, and they will release a comment that if you are not careful and you read it, you will not want to come and do live session again. But what motivates me to come back again and do what we are doing is because there are many people also who appreciate the effort we are putting in. So you need to be able to get some motivation from somewhere that keeps you going. There is a saying that your why will help you. Your why, W-H-Y, is your why. If you break this down, it means your why will help you. Are you with me? So your why will help you. It is very important that you understand this. Your why will help you. Some of you guys need to print the picture of your family and put it in your trading room. So while you are trading and you see their face, that 1.00 that you know you are not ready to risk, you will not risk it because you have a why. You know you have a child. You know you have children that you need to take care of. You know you have a wife. You know you have school fees to pay. You know, print that thing. Let that be your internal motivation. So again, what are we learning today? We'll break all of these things down in the part 2, but I'm giving you the foundational 101. Self-awareness. Number 2, self-regulation. Number 3, motivation. Your why will help you. Your why will help you. Motivation. Motivation is not things that hype you to keep going. Motivation is what makes sure the fire doesn't die. So motivation is like driving a car that the battery is not good. You don't want the fire of the car, or in other words, the energy of the car to die out. So you do everything in your power to keep the car on so that the car doesn't die out. Does that make sense? Same thing with motivation. It's very important that you understand this. Same thing with motivation. So your why will help you. So you have to print pictures, print thoughts, things that will keep you going. So that is pillar number 3. Pillar number 4 is empathy and social skills. Guys, listen to this carefully now. You need to forgive yourselves. Empathy and social skills. Some of you needs to be able to forgive yourself. You are not bad. Empathy on yourself and other people, because of course, so emotional intelligence is about understanding other people as well. Some of you need to forgive yourself. You have called yourself names. You have said that you were a bad trader, you will never make money. Stop doing that. Have empathy on yourself. At the end of the day, you need to be able to understand that in this industry, the same way a medical school students will go to school for 6 years, 7 years, is the same way trading skill takes time. You are not going to start trading and become a trader in 3 months or 4 months. Have patience on yourself. So recognizing how fear and grief drive your actions, knowing that, okay, so what Cliff is saying is that emotions are biochemical reactions. So it's normal. I am afraid. Yes. Sometimes I always tell people this. I hate it when people tell people, you are too emotional. Grow up. Don't speak like that. Don't speak like that to the mentee. Because where I am right now, 12, 13 years and counting in this industry, in the beginning, I wasn't like that. I have cried before on my account. This clip for Cheqona you are listening to, I have cried. I have cried over my account. I laid down my hands on my account and said, God of Abraham, God of Moses, God of Jacob, please don't let my account blow. And it blew. It blew so well that have you ever blown an account in a way that the account goes into negative? It's like you now owe the broker. So when you now put money into the broker, they deduct that first before they give you the balance to trade. That is how bad the account blew. But yet I laid my hands and I said, God of Abraham. So that simply means that even though that you think you have the skill set, your emotions, your hope, your lack of ignorance about certain dimensions will not change the results. You need to subscribe to the patterns that will make you to become a trader. Very important that you understand this. So these are the 4 pillars that you need to be able to understand, because without you understanding these things, there are 4 most dangerous common emotional traps in trading, and I want to be able to list them for you right here. Number 1 is FOMO. Number 2, revenge trading. Number 3, overconfidence after wins. Overconfidence after wins is one of the most dangerous emotions people don't talk about. Overconfidence after wins. And number 4 is anxiety and fear. All these things are perfectly normal. So when you wake up in the morning, knowing that these things can happen in my trading, therefore, am I ready to face the market? Am I emotionally intelligent today? Meaning, am I aware of what happens each and every single day in my trading journey? Guys, we are going to talk about all these things one by one, in emotional intelligence side. Because you need to be able to understand this one thing for sure, that every single thing that we are teaching here, I want to tell you guys a beautiful story right now. And I want you to understand, when it comes to knowledge in trading, they are like tag team. When you gather all the knowledge together, it doesn't matter how small it is, it changes your life. I'm going to show you guys something. This is 0. This is 9, and this is 8. This is 7. This is 6, and this is 5, 4, 3, 2, 1, and then 0. Now, what I'm about to share with you, I want you to pay attention very well and listen to me carefully now. The information that you are learning here, it is not about you picking some and leaving some. When you come onto the TP Family Masterclass and every single thing, we are not promoting psychology being important than everything. We are telling you, don't choose one and leave one. Build a holistic structure of a body of knowledge. Listen to this carefully. 9 is the strongest among this all. And so 9 slapped 8. And 8 said, wow, 9, why did you slap me? And 8 got so angry and slapped 7. And 7 said, wow, okay, 8, I can't beat you, but I can be able to beat 6. And 7 slapped 6 to the point where 6 even started to think like 9. You know what I mean? If you turn 9, it becomes 6. If you turn 6, it becomes 9. So 6 is now confused. It's thinking it's 9. Anyway, then 6 now slapped 5. 5 slapped 4. 4 slapped 3. 3 slapped 2. And then 1 looked at 0 and said, listen, you were a baby. I can either slap you or you and I can come together. When 1 and 0 come together, what would they be? When you remove this dot from here right now, this is no more 1 and 0, but what? Tell me. This is no more 1 and 0, but what? This is no more 1 and 0, but 10. Is it possible that 10 can now slap every single number on that line? The answer is yes. Listen, guys, when you are strategic in your thinking, if you are intelligent, if you are able to apply a simple concept and create a structure, it changes results. Are you with me? So 1 could have slapped 0 and it would have just been 1. But then when 1 and 0 came together, it formed 10 and it became powerful. What changed? What changed in this context? Knowledge came together. Revelation came together. Affiliation came together. Understanding came together. And it made everything change. So now 10 can now be placed here. So the you that now has come onto this call right now, you may be 1 or you may be 0 knowledge. But now, if you allow the information that you are learning to be added to what you already know, don't analyze the information you are getting here and see if it is necessary to come and replace what you have. You don't need to replace the information you are listening to. You just need to add what you already know and say, okay, upon everything that I'm learning here today on TP Masterclass, what can I add? What can I add? Guys, ladies and gentlemen, listen, in this industry and in life, when you are able to master the skill set of adding, automatically something leaves. Automatically something leaves. If you master the skill set of adding, automatically something leaves. Let's say this bottle of water in my hand is full of dirt and it is only just 500 ml. If I start putting a lot of clean water in this dirty water, eventually this water will become clean. I don't have to pour the dirty water out of this out. I can do that though, but also adding clean water into this that is more than this 500 ml will make it clean. Listen, emotional intelligence is not about removing. Emotional intelligence is not about removing emotions. Emotional intelligence is about becoming aware of what you already have. Are you the individual that gets irritated easily? No problem. Be aware of it. Are you the kind of person that gets angry easily? No problem. Just become aware of it. Are you the kind of trader that anytime you win 2 losses in a row, you become excited? No problem. Just become aware of it. When you understand it this way, the more you are adding knowledge to who you are as an individual, the more useless things start leaving your body. So you may be on this call, Cliff. Why is it that every single time that I am trading and it is getting to my stop loss, I want to remove the stop loss? It is not you. It is because in that moment, there are biochemicals being released into your body. that is coming into your body, making you react in a certain way. Your body is designed to obey what is within you, within you, within you. That is why when you take paracetamol, you don't tell the paracetamol to go into your body to heal you. You don't, in fact, need to pray upon the paracetamol to let it know its mechanism of action. The paracetamol already knows the mechanism of action. It already knows what to do. It knows I am going into this body to look for pain sensations, right? And to connect and reduce it. That is all paracetamol or Panadol is doing. So you don't say, Panadol, when you go into my body, please heal the pain. You know Panadol can do that. So same thing with knowledge about who you are. The moment you start understanding yourself, emotional intelligence starts to begin. So one of the things that I will tell you guys before we even go into the deep part of breaking all these emotions down and knowing how to be able to regulate them, the first assignment in emotionally intelligence part 1 is to go and write down all the emotions you know you feel in trading. Is it FOMO? Is it anger? Is it whatever it is? Is it revenge trading? Is it anxiety? Write them all down. First test before we even go to how to regulate is this week. You have to become self-aware. So from Monday to Friday, record everything. I went into this trade. This is how I felt. I left this trade. This is how I felt. It hit my stop loss. This is how I felt. Write all of them down. It's very important. Let's get practical. With that all being said, I don't want to go on and on and on today because today we have had a lot of calls with the TP family. First, on the onboarding for the accountability program. Second is the TP Masterclass. Now, guys, listen. Every single thing that we are sharing here, you don't need to believe. Just practice it and you will know. Remember my analogy about the baker and the bread? Imagine the bread telling the baker, how bake me this way? It's not going to work. So when you come on these master classes, I know we have a culture in this industry that makes people compare themselves to themselves. Here at TP Family, TP Masterclass, this is not the goal. I am not the only one who can teach you trading psychology. Neither am I the only one who should teach you everything. That is why we have a culture that Kema teaches edge, Ivan teaches risk. Willis is summarizing the book for you to understand how to build habits. There is Albert, who is always also teaching us about what is happening in the market. So the whole idea of you thinking one mentor can give you everything is a lie. That thought in itself is a distraction in the first place. One person cannot teach you everything. Listen to this carefully now. While you are going to this week, one thing I want you to do carefully is please, I want you to be aware of your emotions, because you will need that to come on to the next masterclass. And when I am now taking all the ways to regulate, you will now stay, You may have heard me saying this before, that we have 5 stages everybody goes through psychologically in trading. Let me recap quickly. Stage number 1 is what we call the unconscious incompetence. It is a stage we all start anything. You don't know why you got started. Somebody probably invited you to trading. You probably stumbled across probably some network marketing company or some advert or something, and that is how you started. Unconscious incompetence. No problem. Forgive yourself, but make the right decision. Decide to become a trader. The second one is what we call the conscious incompetence. Now you are consciously aware that you are incompetent. The third one is aha moment. Fourth one is conscious competence. Third one is unconscious competence. So, ladies and gentlemen, thank you so much. Bill, can you close the door? All right, ladies and gentlemen, let me stop sharing my screen. If you guys learned anything and I didn't waste your time, more BFX, please, can you email me? I will look into it and help you, okay? If you learned anything from this masterclass, please drop some ones in the chat, please. If you learned anything from this masterclass, please drop some ones in the chat. Guys, just have patience. You will grow. Believe me, the you that didn't subscribe to this channel 6 months ago, 3 months ago, you are learning something new. Just trust me. 3 months from now, you will not be the same person again. 2 months from now, you will not be the same person. Even 2 weeks from now, you will not be the same person again. Knowledge is very powerful. And so there is more that we are learning, and I'm praying and I'm hoping that you guys will be able to grow. With that all being said, I will not take too much of your time. I respect you guys so much for always giving time and listening ears to what we are learning here. Next week, God willing, is Emotional Intelligence Part 2. Emotional Intelligence Regulation Pillar is what we're going to be talking about. And I pray and I hope that you guys will be able to grow. All those who qualified for the accountability program, kindly do check your accounts, your emails, and your WhatsApp number so that we can be able to take it out from there. All right. With that all being said, thank you so much, guys, for joining. God bless you all and have an amazing evening. Bye-bye.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind